Welcome back to the Everything Property Podcast. One of the more hand-on strategies investors can use in their portfolio is to build. Now, that can be as small as a renovation, to add a room, a granny flat, subdivision and add a dwelling in the backyard, or knock down and build something brand new. Now, there is one item in the way of the build that you need to get right, because if you don't, it could be extremely costly. Today's guest, originally from Dublin, has been dealing with construction contracts for the past 15 plus years, and he's here to tell us everything we need to know and what he knows. Cian Brennan, welcome to the Everything Property Podcast. How are you?
Very good. How are you?
Not too bad.
I have to correct, just in case anyone from Ireland is listening to this, right?
Yes.
I'm from Galway, not from Dublin. That would be a mortal sin to let that one go without correcting you. I would get in serious trouble.
All right. Well, look, glad you did, mate. And actually, it was funny. I was looking back, as I mentioned before we started, LinkedIn. I think I reached out to you in September 2023. You're in Perth. I was in Sydney and trying to get a meetup happening. And here we are 12 months later. EP's traveling over to Perth, mainly for holiday and getaway. But I thought I might as well do a bit of work and catch up for a podcast while we're over here. So, look, talk to me. Pretty interesting. You moved over from overseas to Perth in 2008. So you've been here for a while, but why Australia and why Perth?
By chance. Yeah. So when I was in Ireland, a company approached the company I was working for, approached the university that I was in, and said, we're looking for 4 or 5 people to come out here, and basically they wanted us to work on an oil and gas project. Yeah. They couldn't get enough people in Australia. They go, we'll sort out the visas, and we're like, yeah, absolutely, we'll be there in 9 months, right? And so about 5 of us quit our jobs, and we went traveling for 9 months around Southeast Asia, and arrived in Perth and had a job straight away. And it just went from there. And at the same time, concurrently, Ireland blew up. Right, the GFC happened, construction stopped, and Western Australia, it just went the opposite way. It just went on a massive bonkers. Iron ore price was through the roof, oil price was through the roof. It just went bananas. So that's the reason I came, and probably the reason I stayed as well.
Yeah, okay, because it's almost been 2008, 2024 now, so it's been quite some time. Talk to me a little bit about your then progression into starting your own company. So there has been a couple of companies you worked for before and in contracts and that kind of stuff, but how do you sort of get to starting your own business?
So go right back to Galway, right? I have a business card at home that says 1942 Brennan Contractors, and it was my grandfather. He was the head of the Building Association in Ireland, Construction Industry Federation in Ireland. It's a big construction family, and I always wanted to get into construction because of him. And so that was how I essentially got into construction, but I didn't know at the time, but they went out of business. Brennan Construction went out of business. I didn't know why they went out of business, but my father said to me, no, contracting is a mug's game. You need to go client side, right? That's where stability is. You need to go to university, like do that route for construction, for stability. And so over my career did just that, and then came over here, worked for all the big oil and gas companies, everyone you can think of, basically, big mega projects. Then went to the Middle East, went to Saudi,
the
Iraq.
Home of oil,
yeah, like literally the home of oil. So all of these mega projects, and over time, I saw just contractors, subcontractors, the little guy, basically, the small guy going out of business, being bullied, pushed over through contracts by us, right? By us. And you see another guy go out of business. They're all family-run businesses, civil companies, scaffolding companies, whatever it was. And eventually I got to the stage where two things happened. One, I was like, if my granddad saw what I was doing today, I think he'd be, I'm putting his type of company out of business.
Yeah.
And they'd be happy. And then also I had a bit of an epiphany that I actually know how these companies work. I know how the insides, how they negotiate their contracts, what they're trying to do in the terms of the contracts to basically push the risk off them and onto you. So if anything goes wrong, it's your fault. And so with that, that's when I started the business. And that's about 6 years ago now. And yeah, so we became experts in contracts by understanding essentially who wants what. What are we looking for? We're not lawyers. It's about risk, and it's about cash at the end of the day and getting what you want without taking essentially stupid risk. Does that make sense?
Yeah. Yep. Well, it's interesting because you've been on both sides of it, right? So early days is you were the small guys, then you're working for the big guys, and now you've jumped ship back and you're helping the small guys in the contract. So that's what I want to get into and talk about today, because a lot of the investors, a lot of people I talk to obviously don't have the experience that you have, but in order to turbocharge their portfolios, cash flow, and to be doing these small scale developments and stuff like that, building is almost inevitable in any form. Renovation, at a bedroom or at a granny flat at the back and stuff like that. Obviously, when mum and dads and those investors are coming up to these challenges of setting up a construction contract, they have absolutely no experience. The builder that's been operating for 5, 10 or 15 years knows exactly what he's doing, gives it to mum and dad to sign, and then you hear the horror stories of, they had this in the contract, or all these clauses and stuff like that. So what I sort of want to talk about today is us breaking down that construction contract. What are the sort of different types? How does that all get set up? How does that process work? How do we look at and work with the builder through that? How do we go? Is there any particular clauses that we need to be thinking about and looking for, and moving sort of all the way down to conflict resolution, liquidated damages, and all that kind of stuff, all the fun stuff I'm sure you need to deal with. So look, if you can, and if we can break it down from the top, construction contract types and the strengths and the weaknesses, what are you seeing out there, and what sort of options does the everyday investor have to be able to do a project under?
So everyone has a motivation. So I guess for the sake of this, let's put the listener's cap on, right? So the investor. So he's against a builder of some kind, and that's essentially the relationship. And as you said, the builder has done this many times. And
that's my issue.
They know how to play this game.
Yeah.
And so if we just take a step before we talk about contract, what we ultimately want to do is be so specific in our contract, so dialed in on what we want and how much it's going to cost and when you want it to deliver by, that everyone's like, yeah, I got it. We sign a contract. We know what's in the contract, but I never want to see that thing again. It's done. We'll just talk. We'll have a good relationship. But I know that what's in the contract. I know it's there. We both know it's there, and we use it for if something happens. Yeah, that's kind of what we want to happen. The thing is, there's going to be various different things, and there's kind of a couple of different categories we need to look at, and that we need to be careful of in a contract. One is, how do I get out of this contract? One is, what happens if they don't do the work? And then changes. Yeah. Right? And then I guess ultimately as well, if they don't do the work, it's kind of related to time. Is it done on time, right? Yeah. So they're the kind of different things that we need to look for. And ultimately, you're not a contracts expert. I don't think you need to be in a residential project to be a contracts expert. You just need to have common sense and understand, in these 4 scenarios, what does the contract say that's going to happen? So that when that happens, you're not like, oh no, I'm obliged to pay him even though I didn't approve it, or those type of things. So that's getting your head around those specific things are very, very important before we do anything. But again, when we look at the motivations, the builder is going to give you ultimately, if we look at the process, what's going to happen is you're going to get your drawings together, your engineer drawings together, you're ready for construction drawings, so you have your planning permission drawings, and you're ready for construction drawings, and you'll be working with the builder probably at this point, right? You probably have selected a builder, right, and you're getting ready to sign a contract. I would say more often than not, he or she, the builder, will propose the terms and conditions to use.
Mm-hmm. In terms of the contract.
The contract.
Yep.
Right. Okay. Now, we don't have to do that. We don't have to use the contract that he gives you. Mm-hmm. But because he's done this so many times, he's going to give you the contract.
Yep. And
so there's a lot of different types of contracts that are out there. In Australia, you've got the Master Builder's contract, you've got the HIA contract, you've got the AS suite of contracts. Mm-hmm. And so each one of these are designed by different batches of people.
Yep.
Some are designed by architects and builders. So if the one's designed by architects and builders, going to favor architects and builders. If something goes wrong, we'll make sure the architects and builders come out okay. The builders one, the master builders one, is going to favor the builders. The HIA one is probably pretty fair. Housing association, reasonably fair, right? So that's first thing to consider is. But the most important thing of all of this is to understand that you can negotiate everything. They're going to give you, excuse my French, they're going to chance their arm. Yeah, they're going to give you they're going to give you their shittiest contract, hoping that you haven't a clue. Hoping that you haven't a clue.
Exactly. This is why we got you on, because that's exactly what happens. They're not going to give you reasonable terms up front. No. It's going to be what suits them best first.
Exactly. But you can negotiate, and that's important.
Okay, so talk to me a little bit about, from what I gather there, is HIA the best contracts to be going with from a owner's side, from an investor side, or it doesn't matter, it's just that get the contract and then we can review the terms?
Yeah, when it comes to, from my world, right, the types of contracts are massively matter, right? But in these residential contracts, the values are not overtly huge, and it doesn't matter that much, because you're gonna negotiate.
Yeah.
Okay. You don't get one contract and think, oh, that's totally in my favor. That's not the way it is. It doesn't matter that much as long as you know I can negotiate, and I'm going to negotiate on really those four elements.
Okay. Perfect. Well, let's run through what are some of the things that we need to be looking at straight away when we get these contracts. First of all. Is it that we should be going to the builder with it and proposing the contract, get the builder's contract first, and then work on that? How do you propose we do it? Go out to tender out to the builders. Like let's just say I've been working with my architect. He works with a couple of builders. We've went through some of the designs. He's really clued on about the design of it to minimise cost and make it as economical as possible. What do we do? What's next steps there? We tendering out to builders, getting them to send contracts. What do you think?
So the process I would follow is originally you're going to need to get an estimate at the start of how much this is going to work, right? So how much it's going to cost. So I would work with a building broker at this stage, or you can do this yourself if you know who the builders are. Yep. But that's the problem. You don't probably know who the builders are, who you're going to go with. That's why a broker is worth the money. So up front, you go to a broker, and with your development approval drawings, you can give those development approval drawings and a brief scope of work to 3 or 4 builders that your broker suggests. Right, so now you know that these are 3 or 4 builders that are right for your size of dwelling that you're going to build, the right kind of size, that have the right capacity,
in the area. Maybe you've seen a couple of projects driving around the streets.
Exactly, you're not going to know that. A broker will know that. Okay, so now you've gotten 4 or 5 of these guys. Really, when those prices come back, there's a couple of things you want to look at. Before we even talk about contracts, the first thing you want to look at is obviously the price. What do the prices come back at? Yep. But also, when you look through each element in the pricing schedule, does it actually make sense? Have they not priced stuff? Have they like have how much effort have they put in?
Yeah.
So if you look at how much effort that they've put in, right, into like they'll have comments and stuff, to put a lot of effort in, you know that they're pretty invested. If they filled in every line item that you asked them to fill in, they're pretty invested. If they've just done 3 or 4 line items and given you one overall sum, you know that they're, you know, that price is very, they're busy. That might be, so that's, you start to get some answers, right? From there, you can choose a builder if you'd like to. The reason I say this works is in big construction, going to tender and doing a full-on tender is definitely the way to go. Yeah. But in these scenarios, it's about selecting the right builder. It's probably more important to get the right builder than the cost, so that you pay the least amount at the end of the day. The right builder is so important. So before we even get to the contract, we want to see, okay, really when we think about a builder, what they do is they, at the end of the day, they're like an entrepreneur, right? They just get this guy, going to get him to do this thing, this guy to do this thing, this guy to do this thing, and I'll coordinate the whole thing. I'm a project manager. I'm going to take money off the top for doing that and for winning the work, which is fine, right? But you got to suss out, after you've selected your builder or selected 2 or 3, you go chat to them and you ask them questions like, what are your relationship like with your suppliers? Have you got a lot of suppliers? And try and figure out what their supply chain is like. Okay. Now, I know we probably talk about this later. We also want to figure out how solvent they are, right? So figuring out how solvent they are, you can ask questions. Well, how many jobs have you got? How many jobs do you typically have? Right, so where do you operate well? So like they go, oh no, so you know, typically we're at about 10. Right now we're at 15, and you're like, oh, bingo, no, that's not good. Yep. Right, or they might say, typically we have about 7 or 8. Right now we have 4 or 5, and you're like, okay, that's a nice little sweet spot. They're kind of underutilized. You're trying to find the right type of guy for the right sort of project that you're looking for. Yep. You can use a website like Creditor Watch. And you can pay just for the smallest amount of credits you can, or get your free trial or whatever you need to do. Yeah. And with Creditor Watch, you can see, have they been pinged before for going to court, for not paying people, for have they gone, you know, have they got any? It'll give you a rating how solvent they are, basically.
Okay.
So
good, now you tip that one. Yep.
Now you're starting to build a bit of a picture about, are these guys any good or not, right? Before we've even talked about the contract. That's more important. And then when it comes to the real before, it is it's, have you as the client, have you got your drawings done completely? Right? Are they entirely done? Yeah. Everything is done. Right? Are you basically, can you say to me, right, without laughing at me, that I'm not going to make another change until the project's done? Okay. That's what you need to get to. That will save you more money than any contractual thing I can say to you, right? Contractual is basically protecting the downside.
What are some of the things that people are missing? Like, or do you just mean that, you know, once someone starts seeing something get built, they go, oh, you know what, let's move this, or let's change that to stone? Do you mean that? Or do you mean there hasn't been like an RCP done and, we only accounted for, say, 6 lights in this room? Like,
both of those things.
Both. Okay.
Both. Literally, you've like, so many people want to get started for whatever reason. Maybe they got mortgage out and they got money.
Mortgage, of course.
I need to get started, right? But just chill, right? Get the drawings done. Be like, you want to go to like, if your builder's helping you with the drawings, or you've got someone else helping you with the drawings, it can often be both of those guys.
Yep. Architect, hopefully.
You gotta go, are you happy that this is fully done? Like there's nothing else you're gonna need to change, that you're gonna come like during the project? If they can say that, then you're pretty much going. So, but your architect, your builder, everyone is like, yeah, these are really good drawings, we're good to go. You don't want to get yourself in a situation where like, oh, we're not sure yet. In the project, you might decide on X, Y, and Z, and we can figure it out when we get there. It's those things that you don't want to do.
Okay. All right. Interesting. Good to know. So essentially, have your package completely finished, because the issue is with that I can see is that your DA and your CC pack is one portion of the drawings and the documentation, but there's probably also other drawings that I can think that you'd still need to include in there for the builder that aren't picked up in say like a DA set.
But that is just the estimate.
Yeah.
Now after you've done the estimate, then you get the full construction drawings, which include all the mechanical, electrical, all the drawing sets, and then you get them to reprice it again, and then that's the price that you lock in.
Okay.
Right. In theory, they should be this. If you've not changed from DA to here, they shouldn't change.
Okay, you're just including more detail.
You're just including more detail, but they probably will change.
Yeah,
guaranteed, right? But you could at this stage, if you wanted to, go to more than one builder to get these last prices.
Yeah. Okay. Would you recommend? I mean, usually when people get quotes, they start with go to 3 builders and work down from there. Is there a sweet spot magic number, or it's just who's sort of working in the area?
It is. There's no magic number.
Okay.
Are these the right guys
for the job?
For the guys, for the job. So you could have two. You could have 2 or 3 guys. Typically, when you go to get those estimates, go to the estimate to maybe 4 or 5. Then when you're going to get the actual pricing based on the construction drawings, like we said, you can either have. If you go, there's one guy who's a standout. His price is way lower than everybody else. I've seen that quite a lot.
Yeah.
But he's priced everything.
Okay.
He's still lower.
Not always a good thing.
Not always a good thing. But you're like, okay, he's definitely standout. He's put loads of effort into his finances are good. You could get to a stage, because architects like fancy things. Architects love fancy things, right? Yeah. You could go to before you sign with the construction company, you could say, hey, can you help me value engineer this? And they can go, yeah, if you got rid of that material, replace it with that material, you got rid of that, replace it with that, you could actually save X, Y, and Z for no additional, it'll still look the same. And you're like, okay, cool, I can make those changes, and the builder can help you with that. That's when you have a really good builder.
Okay. So you're doing that with the builder or with the architect?
You do have to builder.
Okay, with the builder.
With the builder. Right? The builder.
Perfect. All right. So let's say we've worked through that. We've got our price. We've value engineered it, and we've come to both maybe potentially a timeline, and we've come to a price. How do we both stick with that and make sure that price is what we paid at the end once we've completed the build, and how do we ensure that the builder is going to complete the project in that time frame? So for example, if you're starting building in January and the builder says, yep, it's 9 months or it's 10 months, you're going to go, okay, perfect, I know that I'm going to be finished then, which means the end of the year, September, October, I can be selling, it's perfect. Whereas if that builder blows out to 12 months, you can't be selling that project in the end of December. It's going to be hard in January, no one's around, and it's going to really stuff you, because at that part of the project when you finish, let's say if it's a brand new build of a couple of townhouses or something, that's when your exposure's the most. You're paying all that interest on the loan and all that kind of stuff.
So there's a couple of things that are really important here.
Yeah, tell me.
It's the size of the project. If we're building a reno, we're adding a reno, if we're doing a subdivision and we're doing a small build, right? Okay, you're going to have your builder, he's going to give you his contract, and then that's, okay, we can do some negotiation on that. The couple of things that you talked about, them being late and reimbursement for loss of profit, they're going to be big things, but they're things that you're not going to really be able to negotiate very hard on when the builder gives you his contract.
Okay.
But that's the risk could be smaller because the contract size is smaller. Okay, so that we're talking about liquidated damages and consequential damages. So let me just talk quickly about that.
Please.
Right? Liquidated damages is you being reimbursed for the additional cost of the construction for them being late. So it's the additional cost of the construction, right? So how have you been impacted with additional costs for the construction? How much more has it cost you because they're late for the construction of the project? That's liquidated damages.
Yeah, okay. So not holding costs?
Not holding costs could be if that's what's going to cost you.
Yeah.
Right. That's fine.
Okay.
Right?
Perfect.
Holding costs. Consequential damages.
Yeah.
Is essentially loss of profit. Very hard to get negotiated consequential damages into a contract, right? So consequential damages are reimbursing you for your loss of profit, for not being able to put that house in the market, get it rented, your loss of the revenue from your investment, that's that side of it.
Okay.
So if your project is big enough that it is that's going to be a huge problem for you. It'd be smart for you to be the guy giving them the contract, and you would ask a lawyer to help you with that, and you would get an AS contract amended by your lawyer to include consequential damages and liquidated damages that are in your favor.
Okay, and is there a sweet spot for the value of that contract? For example, if it's a renovation and it's a $20,000 contract, obviously we don't need it.
No.
But is it like you'd recommend it once the contract hits $1 million, $1.5 million, $3 million, or anything like that?
It would cost you,
or is it?
Yeah, it probably costs you $7 or $8 grand to get for a lawyer to do that for you.
Okay.
Maybe not 7 or 8, but in that ballpark, let's say, right, for a lawyer. So you'd have to consider how big is my investment for that to be meaningful. That's the bottom line. That's the cost for you.
Okay, and it might be situation dependent, right, on the investor or the developer that's doing the project.
Exactly.
Yeah. All right, what else do we need to speak about and look out for? What about timings?
Right. So let's just go to the normal circumstances. Your average person's going to come. So they're going to give you their contract. So the smart thing to do would be to get the contract reviewed, right? But let's just say you didn't want to do that. You're looking out for termination clause. How do I get out of this contract? Or how do they get it? How do I get rid of them if they're crap? Am I able to get rid of them? So you look at the termination clause, see what it says. A lot of contracts will talk about all the ways that they can terminate you. You don't pay them, they're going to get rid of you and walk off site. You don't do X, Y, and Z, they're going to. But they don't talk about if they don't do what I'm supposed to do, then what? Right? So you want a scenario where they've not built in the time frame that they said they built, or they haven't built any whatever thing that they've done what they said. Right? You want to say, well, you've not done that, so now I can terminate you. And even better, I could potentially get another guy to come in and bill you for delays and stuff. Okay, so that's when you're looking at the termination clauses. You want to look at there's the getting out of the contract. Delays, as we talked about, would be liquidated damages. Okay. So if they're going to be late, can I apply liquidated damages? Again, we got it. This is we talk about this a lot in my business. Is it has to be reasonable for it. Like, there's no contract unless they accept it. Yeah. So if it's over the top and you're trying to get everything, then they won't accept it. But if you're going, okay, liquidated damages reasonably, how much is it going to cost me if you delay me? Right? Not loss of profit. Yep. It can't be loss of profits. How much is it going to cost me for the construction project? Extra for you being late, because there's costs associated with time.
Yeah. You got interest costs, you got holding costs. So
so then, what is my? It's called a genuine pre-estimate of costs. Then you have a figure and you agree a figure what the liquidated damages per week, per day, per month, whatever that would be.
What else do we need? What else is in there that we need to? What about conflict resolution and that kind of stuff?
I'll talk about that in a second, right? Yep. So the main one is changes. Yeah. Right? So changes, I already said, like 90% of your problems will go away. Yeah. It's that simple, right? Yeah. We don't have to talk about any of this contract stuff. If you know exactly what you're going to have, you chilled out at the start, you got all your drawings in place, and you're like, this is the final product, right? But let's just say changes happen. Let's say in this example, it's not even your fault. Right, something's happened. They've gone digging. They found this rare snail that they have to get an expert to come in to move this rare snail. Yeah. Right, some weird thing. Right, comes in.
I've had a case like that, but with frogs. But that's another podcast.
It happens. So, what does your contract say around changes? Now, the typical thing that happens here is you want to have a mechanism for. If they want to change stuff, they need to submit it according to a process. Yeah. Right. So you've instructed there's been a change, or you've instructed me to change as the client, and then because of that, I've submitted this document to you, and then you've approved that document, and then we're good, and then we can move forward. Right. That's essentially what you want regarding changes. So you want to be. The man in charge, right, being the client. What happens is a lot of times and I've seen this a lot in residential contracts, is they'll come at the end and they're like, oh yeah, there was like these 7 or 8 changes, so I bundled them together, and here it is, 50 grand. And you're like, what the hell?
Yeah.
I never would have approved you do that before you started. You need to, they need to get approval before they started to work for the price.
Perfect.
That's basically it. So you got to look at the change clause. Does it say that? And then you can also remember, if it does say that and then they don't do that, well, you don't have to pay them, because the contract says you're supposed to get pre-approval before you did that. You did none of those things. Therefore, I'm not going to pay you those things, and you can use that as leverage to negotiate.
And what about if, let's just say, someone's first project, they get into the space, maybe the frames are up, and they say, ooh, be better if we move this wall here, and they make those changes. We've locked in the paperwork, we've locked in all the documentation, but once that client or once that investor or whoever starts getting on site and says, it's going to be better if we make, or if we tweak that, what's the process, and what are the sort of ramifications or consequences?
Well, the first thing you got to realize is you're going to be rinsed. This is it. This is the whole point of what we're trying to avoid, right? So, if you can avoid that, avoid that, right? Yeah. Just talk about contracts, construction out the door, everything, show it out the door. This is what we're trying to avoid. But if you have to do it, and maybe there's actually, I'm changing something for the better. It's going to cost me X, Y, Z, but it's actually going to save me a load of money down the line.
Or maybe it's worth more.
Maybe it's worth more or whatever. Yeah. You just got to do what I just said there, which is change this to that. Yep. Give me the price of how much it's going to cost. In addition, don't do the work until I approve it. Right, and you just give, and then one of the key things is they need to give you a quote within a specific time period. Okay, you can't have them like waiting 3 months for a quote, and then you're waiting 3 months for a quote. They haven't started to work. There needs to be a time period for them to give you a quote, like 3 or 4 or 5 days or something. Is
that why you get rinses? Because the quote comes back and they go, I don't want to have to do this. This is a bit of a headache.
You could get a massive quote, or they could have done the work, then give you a massive quote. Now you're in a sticky position where you're like arguing about the costs.
Interesting. All right.
But they know like it's demand supply thing. Like you need that done. Yeah. And they're the only guys that can do it. So why wouldn't they charge you a lot of money for it?
Is there any ways? There's a lot of builders going bust lately. I know we covered it and we spoke about it a little bit about that credit watch and that check. Is there anything else some people can do to cover themselves in that situation for that builder? Is there any more checks that they can do, or would you recommend?
When you go to a building broker, they'll manage most of this process for you, by the way. Okay. So I reckon it's worth the money.
How do they get paid?
You'll pay them.
Okay.
You'll pay them.
So it's an agreed rate.
It's an agreed rate.
No. Contractor percentage or anything?
It depends on the broker. Right? It depends on the broker. But they will ask them for their accounts as well at the start. So now you've seen their accounts, you've checked them out on Creditor Watch, you've figured out how many projects they have on the go normally and how many projects they have now. You've established that their supply chain is pretty good. So you're in a good enough situation now that you've done a lot of pre-work. Yep. So that's about the most that you can do, because if they go bust on your project, there is very little you can do. The only thing that I would advise against is whoever has the money has the power in any negotiation or any deal. And so if you see, or if you're starting to see them not show up and there's not a lot of people and there's rumors that they're going out of bust, it's like, that if I pay them anything, that's potentially not going anywhere. So only make sure that you're only paying for work that you can see that has been done.
Yeah. Are you able to talk to us just a little bit about the contract set out, the claims, the payouts, and how that kind of works for anyone that wouldn't know how that works, like thinking that maybe they pay that lump sum at the end, or do they pay it all up front? How does sort of that work with claims and payouts and that kind of stuff?
So the way you would want to schedule it, right, is as simple as possible. As simple as possible. So you really want to agree a lump sum. Because if you're giving them all the drawings, they have everything, they have all the spec of everything that needs to happen, they can give you a pretty accurate lump sum because they know exactly what you want. Cost plus is not going to work in your favor because they'll just cost plus whatever they do, and they're just going to take their time and do lots of stuff, right? So the lump sum is in your favor, and then you want to break it into milestones, right? And then in those milestones, they can be like, depending on how long the project's going to take, it could be certain parts of the construction. The builder can help you with this. This is reasonable, so it could be foundations in, the roof is in, lockup, those type of things.
Yep.
And so you'll pay them at those moments in time, which the bank will help you with as well, because if you've taken a loan for that, you're going to have to show them that you've signed off on that before they've released that cash. So that's definitely the way to structure it if you can.
Yep.
You don't want to get in a scenario where they're invoicing you for work done that month. And then you probably need a quantity surveyor, or you probably need to go to site to go, did you do all of that? Yeah. All right, you really want to wait until something has been finished before you pay them.
Yeah, okay. So like slab down, frame, lock up.
Whatever it is, yeah. Not like, I did 50% of the slab this month, so I want to get paid for it 50%. And then you're like, oh.
Maybe finish that, Paul.
Yeah, exactly, yeah.
What about at the end of the job, defects and is there any retention that's held, or are they paid out in full? How do we sort of work out that, and how do we make sure that builder stays around? Because if I've just finished whatever project, you say it's a brand new house and there's all these blue bits of tape everywhere and I need it filled.
Yep.
How am I working through that, or what's the best setup?
Again, it depends on the size of the project. Yep. But I'll tell you, the best case scenario is that you will, let's just say, on every invoice that you have to pay them, you will withhold a certain amount until 10% of the contract value has been. So, let's just say they put the slab down.
Yep.
So you wouldn't pay them. You'd pay them 90% of that, and you'd withhold 10% until you keep doing that until 10% of the contract value,
the total contract, yep,
has been. You have that.
Yep.
So you have that money. They will get, as soon as they complete the project, they will get half of that. And as soon as 12 months later...
When you say complete, does that mean
like
that
PC?
OC? Yeah, okay.
Right. So as soon as they complete the project, they hand it over to you, you sign it off, you're happy, they'll get 5% of that money, or so half of that money, which is 5%, right? And then 12 months down the line, they'll get the other half of that.
Okay.
And that 12 months, that money is to cover them if stuff, So
there's a leak in the wall.
Yeah, but let's just say they come out and they fix it. Cool. They don't come out and they fix it. You can use that money to get it fixed.
Okay.
That's what that money's for. Security, it's called.
Okay. And who holds that?
You would typically hold that, or the bank would hold that.
Okay.
Right, there's 3 different options for security. There's retention, which is what I just said there.
Holding on to it.
There's a bank guarantee. Right, the builder can provide you a bank guarantee for 10%, the same amount of money, or you can do an insurance version of that as well. Which is
what do you recommend?
At the retention, because retention is cash.
Yeah, hold it.
Yeah.
All right, is there anything else that we need to be wary of or think about when we're putting these contracts together? Is there anything we've missed?
Just know that you can negotiate. It probably is worth getting it looked at, depending on the size of the project.
Yep.
And depending on how much of your investment is in there.
What does it cost for someone like either you guys or a legal representative to review a contract? A really good one.
If you went to, I'll just be totally honest
here,
here, right?
That's what we're here for.
Right. If you go to, if you go to a lawyer, right, tell them I don't want every risk taken out. Right, I just want stuff that's actually going to happen realistically. Right? I don't want to go back to this builder with 50 comments on their contract because they're never going to agree to it. Right? Can we just look at the main things that are happening in these 4 areas that I said, the 4 areas? So how do I get out? Like if I'm delayed, if there's a change, and if they don't do the work, right? Okay. Let's just get myself covered in those areas, and then you're pretty much covered. It takes care of 90% of the stuff. Do that, or we probably actually wouldn't do it for you, to be honest. But there's other companies that would do it for you, right? So a quantity surveying company, it'd be a very good a good bet to go to, and you probably will have used a quantity surveyor in your process anyway to do some sort of budgeting or estimating, maybe.
Yeah, I was going to say, you'd recommend getting a QS across that project before sending out to the builders, just so you have a rough idea.
If I would follow the process I said with the broker and not involve a QS.
Okay.
Right? Unless your project is big enough that you're like, I really need.
Yeah, okay. We're talking in the tens of millions or plenty of millions. All right, perfect. And any case studies or anything that you reckon you have any examples of either horror stories or good stories where you've tweaked these, you've either saved money or someone's come to you and lost some money because of anything we've discussed?
We had a laugh about this before we started.
Yeah.
I've got a lot of stories between a subcontractor and a main contractor on a large construction project.
Yeah.
So brutal, horrendous stuff. But between a client and a builder, when they're building something, it is the same story over and over and over again, right? And this is where I'm saying the contracts almost don't matter. It is get your documents agreed and sorted. Don't make any fucking changes.
Okay.
That's it. If you sort that out, like 90% of your problems go away.
All right.
Yep.
Perfect. You just got to sit on it and deal with it.
Yeah, just deal with it, and then you'll be fine. Hands off. It makes everything easy. Now, obviously, COVID and supply, like you can't account for that sort of stuff. But typically, well, you can account for that sort of stuff. But that's a conversation for another day.
Yeah.
But ultimately, that will get rid of most of your problems.
Okay, and the way we usually end up these podcasts is we ask people. One is, what's a quote you live your life by? Tell me.
Right now, in our business, and for me, things change over time, but it is be brilliant at the basics. So what I mean by that is, it's what are the few things that actually matter in our business that's going to move the needle, or personally in a sport, and don't be doing the fancy things. Just get really good at those basic things. They're probably boring.
Yep.
And you're probably like, you don't want to eat well. You probably don't want to go to the gym. You probably don't want to sleep well, right? But they are the three things that are going to keep you alive, happy, and doing well. Not like the magic supplements, not the
taking a little
whatever, not the saunas, not the cold plunges. It's the brilliant at the basics.
Yeah, perfect. I like that one. And relating it to sport, I can also reminds me of my football days. And last one is generally we ask for a golden nugget, so a piece of information that you can share with the audience that is high or significant value, which is pretty much the whole podcast. But if you had anything to come to mind that sort of you would recommend to clients, or that you've put out through either your socials or your podcast stuff, what do you think?
With this is, so it's, even though it's quite combative, and what I've said is you got to be careful of this, you got to be careful of this. At the end of the day, what's most important to you is, I want to build the thing. It's probably more important than the price. The price can probably go up 10 or 20k, and it's going to sting, but actually getting the job done is probably more important. Imagine the job wasn't done, and you're like, I can't get the job done. That's way worse. So when you look at it like that, it's like, right, and when you're even talking to the builder, hey, let's just get this sorted and just throw this contract in the bin. And let's just work on it. If stuff goes wrong, like we still have to do everything that's in the contract. Let's just get this sorted, and let's just get it out of the way. Let's have a little bit of a nasty convo now, right? So that we don't have nasty conversations later, because you want them to do the job. And also, lowest price isn't the best thing. Not always.
Yep.
It's the lowest price at the end of the job. So we've gone through all of those checks, we've looked at the guy's put a load of effort in, we checked his finances, we've checked him on Creditor Watch, he's helped me value engineer the project, he's invested, he's spent all this money so far and you haven't given him a dime, he hasn't even signed a contract with you, and he's a little bit more expensive than this other guy who's not hitting those metrics. You really got to weigh, and he's cheaper. Yep. You got to weigh up your options. Probably go with the more expensive guy.
If the cheaper guy's missing something, he's just got to wear that. Like if he oversees or misses it, he's just got to wear it.
Provided that you've done the drawings like we've said it.
Okay.
Everything's in the drawings.
It's all there. It's all spec. It's on the plans.
And you said price for everything.
Yeah.
Right. Like nothing. No nothing.
Exclusions. Yeah.
And then he comes back and goes, "I didn't price for that," and you go, "Well, tough titties."
Perfect. Well, Cian Brennan, appreciate you jumping on the Everything Property podcast, my friend. And next time you're in Sydney or next time you're in WA, mate, we'll do a part 2. But thanks for coming on.
Yeah, absolutely. I'm looking for. I'll come to Sydney and we'll do part 2.
Done. Too easy. All right. Thanks. Appreciate it.